It's sort of a property. If we can get tokenized stocks and bonds and other tokenized assets, we can really start to see people trading stocks on chain.
For those who don't know, Martin Shkreli is a former hedge fund manager who co-founded 2 hedge funds and served as the CEO of Turing Pharmaceuticals. He gained notoriety for raising the price of a vital medication by over 5,000% while the company had a monopoly on it. Shkreli was later convicted of securities fraud and ordered to pay millions in damages to victims, as well as sentenced to 7 years in prison. Shkreli, since his stint in prison, has become well known in finance and entrepreneur circles, either being labelled as a villain or a folklore hero for his antics that ultimately saw him spending 7 years in prison. Whether you like or hate the guy, one thing is true: Shkreli is an extremely experienced entrepreneur and has decades of experience in financial markets. On top of this, he has been around the crypto industry almost since inception. In a recent livestream, Shkreli discusses his views on the cryptocurrency market and highlighted potential opportunities in the space. He expresses why he's bearish on Bitcoin but some optimism for Ethereum, cautioning that it could easily collapse if there is a single mistake made by its creator, Vitalik Buterin. Make sure to stick around to the end of the video where Shkreli breaks down where he thinks the most promising opportunities lie in the crypto ecosystem. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
The last 6 months have been pretty chaotic for crypto. And, I think that one of the things that we're learning is that crypto will not be ended by Sam Bankman-Fried. This technology is bigger and more important than any one person. Having said that, it's sort of the crypto world's Lehman or Madoff or Galleon, depending on how you look at it, moment. So everyone knows what Lehman Brothers was. It was sort of this investment bank that sort of went too far with risk and kind of pushed the envelope to get return on depositors' money. And there was a run in the bank, and it was sort of a house of cards. And that's more or less what FTX was. But there's some elements of Madoff in there too. Madoff was a purported hedge fund that actually didn't invest its clients' money. It just put it in a drawer. And that was actually kind of a better case than FTX because the clients were able to actually get their money back because all they had to do is look in the drawer, right? Madoff spent some of the money, but you really can't spend billions and billions of dollars that easily. So a lot of that money was actually recovered. Unfortunately, the returns were not recovered because the returns were fictitious. And then there was Galleon, which was a hedge fund that was run by a guy named Raj Ratnam that was a systematic market cheater using insider trading. In essence, I think FTX sort of has a mix of all of those. In any event, the implosion of FTX, I think, actually kind of guides us in a better direction. And it's actually kind of, I think, a bullish event. And the reason is I think we're sort of applying this technology in the wrong ways. Feeding everybody the opportunity to get crypto was sort of FTX's goal. And I think that that's not such a horrible thing, but it's sort of not what the industry is. So I think that the bubble of people, the average person wanting to get into crypto, I think that's a bubble that is bursting, has burst, and hopefully never come back. I think that the focus of crypto should be on the software, not on people speculating. And certainly the NFT bubble is sort of a prime example of that, where you had this sort of cartoonization and financialization of art, which, from a purist and an artistic perspective has certainly been around for a long time. But the NFT world sort of took that and magnified it into something that couldn't be sustained. And I think the same thing can't be sustained. I don't think that people should be buying Bitcoin on exchanges. I don't think that, this is really going to work in the long run. I do think that crypto and its attendant technology has a really important role to play in software, but I don't think that, everybody should have a crypto account the same way they have a stock account. So crypto, to me, is an asset class similar to other asset classes. So if you look at stocks, bonds, or whatever, you have to sort of look at each element of that asset class. I don't think you can look at the aggregate. And I think a lot of people focus on the aggregate. So I think that for crypto, for whatever reason, we tend to look at the aggregate more than we look at the individual. And I think that's probably a mistake, and that each individual sort of asset is important to look at by itself. The aggregate market cap right now is 870 billion. And you can see sort of a chart of it. What's interesting is that this was the same market cap after a brief bubble in 18. And it just sort of goes to show you that lots of stock sort of indices, whether it's the S&P 500 or this, they tend to sort of have these bubbles that take years for recovery. And the 18 bubble took years to recover, only 3 years. And the 22 bubble could take 10, 15, 20 years if it ever comes back. and it may never come back. For context, trying to understand, what is $800 billion, right? We don't have a lot of context of a number that big. Obviously, there's some companies that big. So you can think of all of crypto as equal to something like a Microsoft or half of one Microsoft or something like that. The more interesting context, if you look at all the real estate on the planet, it's about 200 to 300 trillion. All the debt is around the same size. All the money is about 100 trillion. So crypto, as sort of a money replacement, you could think of it as, if you take Bitcoin and stablecoin together, maybe half of 1% of a replacement for all the money in the world. More interestingly, if you look at all the software stocks, this is something that I think nobody's talked about, and I think this is really, really important. Crypto is software. Some of crypto wants to be finance, so I put that in here as well. But if you think about what is crypto at the end of the day, it's a new software stack, it's a new API, it's a new set of tools. Ultimately, if you think about crypto as roughly 8% of all software, that's kind of a really interesting way to look at it. And then if you extrude sort of Bitcoin and stable coins, that non-stable, non-Bitcoin, that's about 400 billion. So that's 4% of all software. And that's kind of an interesting way to look at it. That doesn't sound too crazy. Again, I am sort of an anti-DeFi person until DeFi starts to sort of embody real world assets. And we'll talk about that in a minute. But I think DeFi is not the place. So the financial stocks are not, kind of what I think crypto is going to be useful for. I don't think that, it'll be useful to try to replicate the banking system off chain or on chain or something like that. It's possible that DeFi can play a role, but I don't think DeFi in its current form, which is basically just the sort of derivatization and ease of liquefying kind of the rest of the crypto ecosystem, I don't think that makes a lot of sense. I think that if we use this technology to liquefy and derivatize the rest of the financial assets of the world, like all the other stuff in this list, that makes a lot more sense. Tokenized stocks, tokenized commodities, those are the kind of things that I think make a lot of sense for DeFi. So in Bitcoin, I'm bearish. I think it's sort of a poor attempt to financialize a database. I think that it's not a bad idea, but I think that, it's a really slow database is one of the problems, and that Satoshi couldn't envision sort of the uptake that sort of Bitcoin, I guess, received. And I think its biggest flaw is this sort of distribution. So its biggest asset becomes its biggest flaw. You have this fractured development community that can't decide on a direction. So there's no way to upgrade software. If you can't upgrade software, you're really stuck with old software. And if you think about the patching software or upgrading software, even open source software is able to do that. Even software that's not quote unquote owned by anybody is able to do that. And I think that that's where you need either a visionary that you can trust or some trusted distribution system that allows for rapid sort of execution of updates. And Bitcoin has neither of that. So I think that the artificial scarcity concept, I know people like to say, well, there's only going to be 21 million Bitcoin forever and ever. And I think that's a little silly because, it could take this piece of paper and cut it into 10 pieces and say there's only going to be 10 pieces of this paper forever and ever. And it's just sort of a canard. I think that money writ large can sort of benefit from new technology. There's no doubt that our money system is sort of stuck in the Stone Ages. And I enjoyed onboarding into Bitcoin a long time ago because it was sort of a magical ability. For me, it felt like email for money, magical ability to transmit sort of something of value. The problem is you're sort of playing with hot potato here. We're all sort of agreeing that Bitcoin is worth something, and you have this sort of greater fool theory that is also present in fiat, but feels a little sillier here because anybody who's programmed a database or spun up a Postgres knows. And I think that we're going to see Bitcoin as a relic, kind of the same way we view hieroglyphics or old tape drives. Maybe we already have superior products, new products will be developed. I think this origin story with Satoshi will seem less magical over time because I think that, we sort of will start to gather that while Satoshi was the first to create Bitcoin and create the first distributed currency, there were a lot of proto-cryptos and a lot of sort of other technologies around the hoop. And again, we don't sort of think about greenbacks, which were pre-dollars. We don't think about wampum, which was one of the first fiat currencies in the US, or the first fiat currency in the US. You probably don't even know what that is. And, or dye stones or other sort of, ways to sort of change the technology of money. So I think that Bitcoin is something that I think 50 or 100 years from now, we're not going to be thinking about as something that lasted the test of time. I think we're still waiting for that technology. So anyway, I'm bearish on Bitcoin. That doesn't mean I think it's going to go down tomorrow. That doesn't mean I think it's going to go down this week or this month or this year. If Bitcoin doubles from here, I'm not going to feel stupid. This is just a long-term call on sort of the technology and so forth. It doesn't mean you should do anything. It doesn't mean that I should do anything. It's just something that this sort of represents my thoughts. So Ethereum is the second largest crypto. It's about 150 billion market cap. I'm more neutral on Ethereum, and I'm not bullish, but I'm not really bearish either. So Ethereum has a much stronger development roadmap, and unfortunately, than Bitcoin. Unfortunately, that's the trade-off, right? Is you have this single visionary and you have a lot of risk that this one person gets it wrong. We're talking about Vitalik Buterin. So obviously I think very highly of Vitalik. And I think that, he's sort of obviously getting it right so far. Ethereum is now worth about half of what Bitcoin is worth. And I do think eventually you'll see that flip. Ethereum will be worth more than Bitcoin. I think that pair trade is actually really good. I think you can be long Ethereum and short Bitcoin, but I don't think you want to be have beta exposure to crypto, just like I don't think you should have beta exposure to stocks. So it doesn't mean buy Ethereum. It means if you're going to bet on Ethereum, Bitcoin sort of spread, I think that spread will sort of contract in favor of Ethereum. Ethereum has worked out really well because there's a ton of utility vis-a-vis Bitcoin, and certainly a huge ecosystem that, like, for example, the ERC20 ecosystem that's been built off of Ethereum. But just because it's better does not mean it's more valuable. And I want you to understand that when it comes to stocks and crypto, it's the same thing. Just because something's amazing, Ethereum is really amazing. It's priced to be amazing. It's 150 billion market cap. So what do you get for $150 billion? Well, there are I listed about 10 companies here that trade for $150 billion. UPS, Intel, Bristol Myers, Texas Instruments, Qualcomm, Nike, Salesforce.com, Adobe, and Disney. You've probably heard of, if not 9 out of those 9 companies, 7 or 8 of them. Probably most of you have heard of all 9 of them. These are really household names, and they're all companies that make somewhere between $7 to $15 billion a year. So Ethereum's got a big sort of shoe to fill with that market cap, and I think it's sort of filling it, but it doesn't mean that necessarily there's a lot more upside. So I think Ethereum's kind of a great technology, but I'm not sure it's a great investment. So stablecoins, I think, are the most incredible innovation that this space has brought. I think distributed compute with ERC20 is really valuable. I think Bitcoin is sort of this first unveiling of crypto, as I said, is sort of very neat thing, but now sort of, I think, a flash in the pan compared to what we're able to do today. But crypto should be really proud of stablecoins. I think the stablecoins are really the first killer app that are, is truly a sight to behold, because being able to send money around the world very quickly is something that at least if you're in the US, whether you're a rich individual, a poor individual, or a corporation, is extremely difficult. Banks have a lot of control. If you have a corporate account, I had a publicly traded company, sending $1 million from the US to, say, Switzerland or to any country in the world is almost impossible. It's wrought with all kinds of issues, and it's very slow. And stablecoins solve a lot of those problems. They create other problems, obviously. There's no refund if you send stablecoin to the wrong place. There's other issues. But in general, I think that stablecoins are an incredible innovation that, people always ask, well, what's crypto useful for? What good is it? And I think anytime somebody asks that question, you can simply say stablecoins. And if they say, well, why do I need a stablecoin? You can say, well, try to send me $10,000 right now, or try to send me $100 right now, or whatever amount of money. And they'll say, well, do you have a PayPal account? And if you have a PayPal account, you may be able to do that, but you also have to comply with PayPal's terms and services. If you've ever been canceled off of PayPal for no reason, that wants PayPal's opportunity and their ability, it's their prerogative to cancel you if they feel like it. So, you could just not pay your bill on PayPal, or whatever reason, PayPal has canceled your account and you're done. And so you also have onboarding and offboarding for PayPal. It's not like it's the last stop. You still have to sort of take your PayPal and move it to your bank, which admittedly is relatively easy. But I think that, no matter what system you're using there, there are limits. I can't send you $1 million of PayPal. PayPal will flip out. Every time I used to use PayPal, even though I had quite a lot of money in my PayPal and things like that, I couldn't send more than a fraction of my PayPal account to somebody. Problem with stablecoins is Tether. Tether is the biggest stablecoin. People use it every day, but we don't know if Tether is safe. It seems to me like there's a risk of a catastrophic event with Tether, which would be, needless to say, really bad for the crypto world. I do think that we would survive that, albeit it'd be devastating. And I do think these other sort of stablecoins seem to be less at risk than Tether, like USD Coin. But I do think Tether has some hair on it, and we don't know if 100 cents of Tether is worth 100 cents. I also think the stablecoin model is a little awkward in the sense that Tether gets to keep all of the interest income from these stablecoins. So they have $60 billion allegedly sitting in a bank somewhere. And in this interest rate environment, that's about $2 billion of income. So they get to pocket that income, even though it's our money. At least the banks pretend that they give us some amount of interest. So, I think stablecoins are a really important innovation, but we're still in sort of version 1 of stablecoins. And I think that we'll see version 2 and version 3 at some point. And, the people that sort of put together yield-bearing stablecoins and things like that will do really. The non-stablecoins and non-Bitcoin Ethereum market cap is about $230 billion. And this is sort of the sector a lot of people focus on because you have sort of the potential for a new Bitcoin or a new Ethereum or something like that. And there's a couple of contenders for that. And we still don't kind of really know who will emerge from this. But this is, to me, is like the stock market, right? You have hundreds, if not thousands, of these different tokens. They all do different things. And in aggregate, they're worth 200 something billion. So which one is going to go up? Which one's going to go down? I don't know. But the crypto I do like are cryptos with real world utility and value. And that's a very sort of small fraction of crypto. So I listed sort of, let's see here, 15 of the top 200 that I thought were sort of passable. And I'm not sort of saying that these are specifically cryptos I would jump out and buy tomorrow. I think they're cryptos that I sort of ideologically am aligned with. So I'm not trying to say that these are sort of good values, which, is a totally different question from are these good technologies? And so it sort of tells you that within the top 200 cryptos, I have 15 that I'll even sort of think about as useful. And of those 15, I'm not sure what percentage of those are good buys, maybe half, maybe a quarter, maybe 10% of them. So you're really talking about of 200 cryptos, maybe one or two are a good buy and 199 are not. So that sort of tells you something about crypto. And I don't think that's a problem. In 2000, I was working at a hedge fund and the internet was coming of age from a stock market financialization perspective. The internet was coming of age probably about 6 or 7 years ago for the mainstream, and certainly was coming of age 10 or 15 years ago for academics and government. So in any event, the internet was all people could talk about. The new economy, e-commerce, this was everything in 2000. And the hedge fund I worked at was Wisely. This was Jim Cramer's hedge fund for anybody who doesn't know that story. That hedge fund was wisely short all of the technology stocks on the menu in the stock market. And I think that was a really good call. And it sort of reminds me of this, which is like most of these tokens are going to be valueless. Most of these tokens are going to be worthless. But the internet, just as the internet stocks, most of them did become worthless. Most of the stocks we shorted did go to zero. Even the good stocks went down 90%. So ultimately, I think that, the internet survived. We know the story. And now software in general survived. And, every software company uses the internet in some form. And the internet did change the world. It didn't change people's financial worlds. And again, I don't think the average person should be jumping in to an E-Trade account in 2000 trying to figure out which e-commerce or internet stock to buy. That didn't work. The same thing and the same reason, this is now post-mortem mostly, that people shouldn't be jumping into crypto and trying to figure out which token is going to work. We don't know, and the odds are slim that you're going to get it right. So the handful of cryptos that I like, I listed them out here, and you'll see a theme. BNB, Matic, Algo, Filecoin, ICP, Aptos, Graph, BAT, Basic Attention Token, RWE, VNS, OP, Golem, Storj, Render, RLC, which very few people know, and then API3. These are 15 tokens that they all sort of do something, whether it's they do a computation, they store a file, they sort of route something important. They're all these sort of unique value, real world utility software sort of systems. And I think that's what differentiates them. The other 190 cryptos of the top 200, I think are probably going to be worthless. And I think that, we really are sort of struggling as an industry. And I don't say this as the crypto industry, because I don't think that exists. The same way nobody thinks about the internet industry as sort of a subsector of software. This is just software. And I think that's the other thing people sort of need to understand about crypto, is that it's sort of a subsector of software, but it's sort of a property. If your company can use the tool, great. If it can't use the tool, that's fine too. I think every software company should be thinking about, can they use crypto? Can they use some elements of these technologies to enhance their software? But I don't think that, you can look at the software without its applications. And it's hard to build primitives or Rails or protocols or whatever and monetize them. I think that's really difficult, because in essence, you could take the same computation and generally remove the token for a lot of these projects or concepts. So sometimes you can't, obviously. Computation is expensive, storage is expensive, but sometimes you can. If you think about sort of some of these that require pretty minimal infrastructures. They're more like open source projects that have a financialization stapled onto them. So I generally don't believe, like I mentioned in DeFi, I do think DeFi 2.0 or 3.0 will be pretty cool. If we can get tokenized stocks and bonds and other tokenized assets, we can really start to see people trading stocks on chain. I think that'd be really great. Obviously, the SEC doesn't like that idea. So I think it'll be really tricky to sort of get there. I do think sort of some permissionless stock trading system would be incredible. It's a very sort of tough nut to crack, but I think that'd be a really, really neat thing. Until then, I don't think it makes sense that we financialize crypto. So we already have something really risky, so and speculative in these tokens. So to make a financial system that enhances the ability to speculate on these tokens, I don't know if that's a good thing. I don't know that we need leverage on this stuff. I don't know that we need loans on this stuff. I don't think we need any of that. And you're sort of taking smart ideas and smart technology and putting them on the wrong foundation. I think you need a good foundation. And a good foundation would be things like real estate, stocks, currencies, things like that. I don't think we need an ability to lend out my Algorand, or something like that. I think that's probably too risky.